Good evening, everyone. This is Tiger Trades. Today is August 13, 2019. Bringing you today's market recap. So, to get things started, today I'm just going to be reviewing some plays that I made yesterday for Monday, August 12th. Simply just because I did not make a trade recap for yesterday. So, over the weekend, I was only focusing on one stock. I believed everything else was either too risky for my liking. I was doing research on a bunch of companies: Apple, Boeing, UPS, Motorola, a bunch of other stocks. But I just believe the FedEx was the only one that was a clear candidate of a long or short position. So for FedEx, I decided to go ahead and take a short position. My entry price was below 162, using 161.50 as a second confirmation in order to get short with a target price of 158. So let me go ahead and show everyone what I'm looking at and why I believe the FedEx was a great short candidate. So to get started, right here in front of you guys, you see is a yearly daily chart of FedEx, right? So each of these candles represents the price movement for one day, and this is for a year. So as you can see, around this time last year, FedEx was trading at $259, while today it closed at $160. So it's been on a consistent downtrend ever since. As you can see, this long purple line, for me, that's a natural occurring resistance that FedEx has created for itself. So what do I mean by that? A resistance point is a point that the stock price reaches, and then either it has a bit of trouble going over, or it just flat out rejects it. So for example, right here, around December, around November 30th of last year, FedEx was, after going down on this downtrend from 259 and then kind of bouncing back up, making its way back up to that 250 level, and met this resistance line and instantly rejected it, right? So it closed right here. The resistance was sitting at 235, while FedEx, the highest it got was 234. And then the very next day, boom, just rejected it. It was a bunch of days, almost 2 weeks of it just going downtrending, and that continued until it reaches this lowest point of $153. And then when it reached this point, it started shooting back up and had some resistance around the 177 level, had some more resistance at 186 level, shut down, consolidated for a little bit, shot down to 167, shot back up, consolidated, and then shot back up all the way up here to this naturally occurring resistant, this line right here. As you can see, the second that it touched it, it instantly rejected it and started shooting back down. And every time it hits it, it goes down, a lot. So now we're here to present day. On July 25th, FedEx went ahead and touched this purple line like it did the past 3 times and rejected it. So let's go ahead and just move in now that you guys see the bigger picture. So right here, as you can see, this is the purple. Let's see, I think this right here is the purple line that I'm talking about. So as you can see, it went over a little bit, saw some resistance at 177 level and shot down. Went back down to the 155 level that I just spoke about earlier. So now what's going on with FedEx, right? So let's zoom out a little bit. These right here are all the moving averages. The green one is the fast moving average. The orange one is a 50-day moving average. So kind of my trading strategy is, if the green line crosses the orange line on a downward trend, that means that price is about to go down, right? So as you can see here, the green crossed the orange, and then FedEx went down by like what, $40. Same thing here. So kind of the green line was about to cross over the orange, which that would have indicated that the price would start going up. But as you can see, it didn't really touch it kind of, went near it and then, rejected it and went back down. And then, as you can see, the price dropped again. So let's look for that happening one more time. So right here, the green crosses the red, downward trend. FedEx is going down, right? So now what happened recently? The green crossed over the orange in the upward trend, so the price shot up. Right now, it's sitting right above it. However, the price, or the current stock price, is sitting below those two moving averages. So what's that mean to me? That means that it's kind of an early indication of a future crossover that's going to happen, right? So for example, right here, the green is below the orange, but then the price, the daily stock price, is sitting above the green line, right? It went a little below, came above, stayed above for a little bit, was kind of toying around with that area, and then boom, it's the stock got the momentum that it needed, pushed over the orange, and then there's the crossover that I'm talking about. So that's kind of the same thing that's happening here. Right now, FedEx is kind of building that momentum in order to have a greater downside. So let's go ahead and just see on let's sort it down. So what I saw this weekend was, let's see, I think it's right here. So this is Friday's closing. This one that I right here in the kind of in the middle. So on Friday, FedEx closed at $163. My whole prediction was if it goes below 162 to short it all the way to 158. The reason being, so the green crossed the orange on the downward trend, right? If it moved, the price ended up moving above the green but below the orange. For me, that is still an indication that this is still a short position, right? So kind of the confirmation that I needed was for the price to move kind of below that this green line, right? So that's why I kind of said, let's see, below the green line, that would have been 161.79. So below 162, confirmation 150, 160, So what ended up happening was a Monday pre-market, FedEx instantly started gapping down, right? So my entry was 162, but if it gapped down all the way to 161 already, right? So kind of we missed our opportunity just simply because the market was moving quick. I ended up kind of getting in right here around 10:30, right when I saw FedEx going down, went below the 200. The red line right here is the 200 SMA. Get below the 200 SMA, kind of curl back up, go up to the 200. And the second that I saw that it was not going over the 200, I went ahead and I entered my short play, right? So I entered at 160, 160.30, and I rode it all the way down to 158.50. Originally my target price was right here, 158, but just something about the market, as you can see right here too, there was not a lot of volume going on, as well as the market itself was not weak. So I decided to kind of cut my play short and just take profits here at the 158.50. Then my whole mindset was, okay, if I see this getting weaker, I'll just re-enter it and kind of write it down. But that didn't end up happening. So that was my play for the day. Another play that I had was ROKU. So ROKU, for the past week or so, after its earning report, has been an absolute monster. So it reported strong earnings. Has revenue increased by like 400% within the past year or so. So right now this stock is really hot. So my whole plan of action was to long ROKU. Yesterday I decided to long ROKU above the 132 level, right? So here what ended up happening, ROKU in the morning, it shot up from 129 to all the way to 135, and honestly it needed some time to cool off. So my whole thinking was, okay, if this stock can hold up this level right here, this 132, get in for a long play, in which I ended up doing. So then this morning, ROKU shot up to 100 to 142. So that's what, a $10 play overnight. And then I said, okay, now it's time to take profits. So we took profits and the stock started downtrending. Now, an interesting play here that I have, a play that I ended up taking towards the end of the day. Let's see if I can get this a different time frame. A play that I really enjoyed, or I'm hoping that plays out well. It's right. Remember I was telling you guys about this green and orange line doing a crossover. So as you can see right here, the green crossed below the orange, as well as it's below the 135 or 136 level that I had as my entry for a long play. That for me, what that means is once you see something like this happening, that means the stock is weak, right? That means there's going to be an introduction of of downside happening. So I ended up getting short right here at the 135 level, with my target price being 132, and then if I get greedy, 131, right? So now I'm gonna keep eyeing this, but that's my play for that I took today, rolling into tomorrow, right? Shorting Roku from 136 all the way down to 132. So, but that's about it. Yeah, it's just only some. Oh, as well, FedEx. I shorted FedEx again today. Let's see. So FedEx is kind of the same thing that happened with Roku. This morning, everything shot up simply because there was great news about China and the trade war. So kind of leading to FedEx going from 150, 158 all the way up to right here, 163.50. So now what ended up happening, you saw this green and orange line do the crossover once again, and now so it was shooting up, shooting up, shooting up until the very end of the day where it kind of started shooting down, right? So this right here is right before the crossover happens, but it's just, let's see if I can do it from a different angle, because when I saw it, the crossover already happened. So in an hour view, the green shot below the red right here. So I don't know if you guys can see it, but like right here around 1 o'clock, the green went below the red, right? So like I said earlier, that's an indication to get short. So right now the stock is at 160. I'm shorting it all the way down to 158. So it's a quick $2 move. Let's see how everything's going to play out. But that's my play for tomorrow. All right, guys. I hope you guys have a great rest of your day. If you guys have any questions, feel free to reach out to me. Peace.